Whether it is Tesla or an oil company, this particular pattern works really well. Okay, everybody, in today's video, we're going to go through top 10 stocks to buy next week. Now, there are some shorts in here as well. As always, subscribe to the channel, click all notifications, because what we're about to go over is extremely timely. So in regards to Tesla, there is a pattern that I use, and I use it quite often when it's available. We really haven't seen it that much, but you need to be aware of it. So these dragonfly patterns right here, you can see that very clearly on how you open, comes all the way down, retests, and then closes up near the high. As we like to say, wicks are price rejection. Once you flip that, that is basically telling you that it's on. So I would not roll this out, but you do have this little resistance point right here. And I really don't need much more to explain to you on this chart, except what you're looking to do is get up and in, right? You can see the downward trend line right here. And I'm zooming this in because we're really just looking for trades right now, right? While we try to see how excited we should get about this CPI number. I can go from here and maybe 216, 217. And I do think it's important to mention that, right? And just so you get it, no one has any idea whether or not we bottomed. We can look at the VIX from 2008. We can look at our anchored VWAP. You can listen to me talk about CPI and macro and the free rate. None of us have any idea. There are no gurus. All we're doing is using past performance to try to come up with something that makes sense and then put parameters around it to make money. Now, if you look at this on the weekly, you can see you've cracked. There's nothing to be overly excited about here. And how erratic Elon's being on Twitter is not helping, but I always think there's a method to his madness. So see if you flip this level, and then if you do, this might be something that you want to be involved with. Now, another quick tip. Set your charts to start looking from January 1st when you're starting to look at charts. Don't go back and look where they were 2 years ago or a year ago. You're probably not going to see those levels on a lot of these names for a long period of time. And if you start looking from that perspective, it starts giving you a different kind of view, one that's very not constructive, right? So what you're looking for is you want to know where you're at over a 12-month. And that'll give you a better understanding. I'm just going to use year to date. Now, you can see the peaks here on NVIDIA. Once CPI came out and CPI was as low as it was back here in January, you started seeing people put money to work. I always look for patterns, and I always look to see, is it doing something different than we've done before? Well, we're above the 5-day, and when we were this high above the 5-day before, that was for about 2 weeks, and then it rolled. This was your second high above the 5-day. Now, when I say above the 5-day, I'm referring to the fact that the slope is up and you're above the 5-day on a consecutive basis, okay? This has been a steady 45-degree angle, and you're at 4 weeks already. So this is the longest we've been above the 5-day when it is on a slope that is going up. Now, someone will say, well, what does that mean? Well, that just means that it's got more support than it's ever had all year in regards to the 5-day moving average. I would not rule that out, and I would not rule this out. This is one that we've been trading around a lot in the trading community, and all I keep doing is making higher highs. You can argue that this couldn't possibly be over. You can argue everything you want, and it doesn't matter. What matters is what is price doing, and price is going up. So you can either sit on the sidelines, or you could talk about, your new model, or why you're not buying, or why you're on the sidelines. But your goal as a trader is to make money, period. It's not to have feelings. So watch this level and see if it breaks out. And if it does, watch this 180. Because once you're in, all I have to deal with is this red bar and this bearish engulfing. Let's just pop this on the weekly and take a look. That doesn't look like the worst idea in the world, does it? My volume's increasing. Look at this double bottom, possible double bottom with the undercut. Now we're rallying. I mean, you're not going to know till 194, but I'm not going to wait for that. Now, you could easily just trade right back up to that 180, reject. We don't know what next week's going to bring. All we can do is focus on what we have right now. Best case scenario is these pull back and then run again. That would be great if we could pull that off. But this space you need to look at. I mean, even AMD, look at this on the 15-minute today, every single time that we pulled back, there was buying. Like, it wasn't once, it was every time, right? Pulls back, bought. Pulls back, looks like it's going to break, bought. It's incessant. Even into the end, if you think about it, you're going into the weekend where you have a tremendous amount of uncertainty with the war, what's going on with cryptocurrencies, because now you're going to be locked into any of their nonsense over the weekend. So that could affect the market. How much selling did you really have from the high over that 2 days, right? So I always look at things like this when you have a big move and then you go into the weekend. How nervous were people that they had to get out of their AMD position? It's a 1.5% move. This is where you're at from the open. So it's safe to say that they're in there, right? You can look at that and say that they didn't really feel the need to sell. So that kind of tells you where institutionals' heads are at, right? They're not really blowing out of it. So all we're going to do is just look for a couple key levels here. And we're going to try to get an understanding of where could we go, right? Because what is the potential? Okay, so this is the first time that you are above the 55-day moving average, which is what I use. We didn't hit it the other day. We hit it today. And that is actually one of a portion of buy signals for me. So I do like it. And I do think we can get up to here fairly quickly, 78.41. And I'm going to look for a follow through next week. Realize this, you have 80% of all funds that are underperforming the S&P, and the S&P is still down double digits. So do you think they want to watch the market run after midterms, as we all know is one of the greatest cycles, and then they're not involved? They're going to put money to work. Whether or not that works for them remains to be seen, but they're going to put money to work. So let's just keep that in mind. And they're going to be looking at large cap names. There's no question about it. Semiconductors seem to make the most sense. But if you looked at core CPI and what came out, it was pretty interesting, right? So core CPI came in at 0.3. The previous was 0.6, and we were looking for 0.5. So that core CPI is without food, without energy. You need energy, right? Heat, cold, or you need food. So they take those out and they just go, okay, core. Well, that's your disposable income. So when that starts to move, let's clean these lines off. So when that starts to move, you want to pay attention. Now, what we're looking for is to see if we can get over this 104.58. That's what we're looking for next. We are in this from the newsletter at $96. If you don't get the newsletter, there is a free link in the description below. But I do like this, and I think you could pop over here. I think you can get through that, and I actually think you keep pushing. You're going into the Christmas season. I would really pay attention to this one. I've seen nothing, literally nothing but buying. I am going to do another candlestick video. This is called the piercing pattern right here. Essentially, you take out the bar, and then as long as you're 50% above that bar, okay, that's a pattern. It's called the piercing pattern. It has a high degree of probability, right? Just like a bearish engulfing does, especially after they execute. But what you want to see is you want to get above that level, and push next week. And then that pattern could complete itself. Your first test is going to be that 105. And then you could see if you can work yourself up that bar. Mind you, again, you're looking at a bar from 121. Okay, you're looking at a 20% move on a bar in a week. And there's nothing there but that bar. So you can get up there fairly quickly, right? You have the gap up here, and you only have these 2 days. So once you're in the gap, you're in the gap. And this isn't the only one that we're really seeing in the consumer discretionary or retail space. Now, you're not really seeing the Walmarts move. They don't really have the leverage the same way, right? But Dillard's is a kind of an interesting story when you're looking at it, because here we are, and you can see this huge breakdown before when we had problems. And you come across here, and I have a saying, if you knock on a door long enough, eventually it's going to open. 1, 2, 3, 4, right? So what I like about this, we had earnings and we sold down, right? So this bar, we're completely selling down. The next day, we're rallying. So everybody that sold here is now on the wrong side of it. If they wanted to buy the stock or thought they were going to buy the stock cheaper, they're now out of the way. You can tell just by looking at this that we really don't need moving averages, right? Because it's pretty obvious that we're above all the moving averages just by where the stock is. So why even bother to put them in, right? I like being very simple with the charts when it's necessary to add things as long as they add value. See this gap over here? So all we're going to see is now we're into this gap, flipping that high and working our way up. It's the end of the week, so I do like looking at these sometimes just to get a different perspective, and that should give you a very different perspective on what's going on, right? So you blow this up, and now I have a cup, I have a handle, and now I'm breaking out of that handle for the first time, right? So I have a weekly cup and handle that I'm breaking out. I look at that close on the weekly and realize that that is the second highest close that the stock has ever had in the middle of this kind of market. You might want to pay attention to this one. Okay, I wouldn't be surprised to see some volume come into this. I like this name a lot. Now, Sam, this one was interesting because a lot of people like this company. And I think it's one of these things where you're going to start seeing some of this. And let me explain to you what I mean by some of this. See this V that's happening right here? And let me just draw it in for you. So a lot of people are saying, what's the hurry? Well, I don't need to hurry. What's the hurry? I can wait. I don't need to build a position now. Right? Market's not going anywhere. Powell's going to do this. This is going to happen. X, Y. And then what happens? So here you are. Now you can see your V, right? When you start seeing volume like this and you start seeing it come out of nowhere, you want to start paying attention. So for me, just looking at this and saying, okay, well, we have this spike and then we come back down and we test that level on where that spike is. And then we pop back over again. You're going to want to watch the doji. Why do we watch these? Because these are periods of uncertainty and then they're defined. That was defined. So to flip that means that these sellers are all out of there. That just kind of makes sense, right? Because how are we going to get through that level of uncertainty if those people are still there selling? Unless we have more buying, which would clear out the sellers, right? So if you think about it from that way, it just gets very simple. So I like this. I like this a lot. Now let's drill into this just for one more second so you can see this, okay? Because I do think this is important for us to get. So I'm going to take this off real quick, and I just want you to see that you are starting to turn here. You do come down, tries to make a low, can't, tries to break out, can't, first close above my 55-week moving average, and we'll go from there. But I do like this. And this has plenty of upside. Plenty of upside. So, and it is one of those names that people love to own. And you go through this and you look at the earnings and go, okay, I'm at $400. And roughly you look at what you're making on the stock and go, okay, well, I could be making more money, but that's still pretty low PE maybe for this. And I think you're going to get some value people that are going to step into these kinds of names. So I would pay attention to this. It's definitely on my radar. I do like this longer term, but there's a lot there and you have a lot of work to do. Let's get rid of these. You can see that curl and you can see where you came all the way down to, right? So when you start coming down to these pre-pandemic levels, right, or these pandemic levels, and you test and you start to bounce, you basically have washed everybody else out. And I would definitely focus on these. So let me know if you like me looking at the monthly and weekly charts, or you just want me to stay with the daily. Just comment on that below. Your comments help. It's actually how I create content. So one of the things that we saw in that CPI data was that natural gas fell off a cliff. It completely fell off a cliff. So what we're seeing today is we're seeing us test this level, come down, people are realizing it, and they're getting involved. I'll give you another tip. When you get that CPI data, yes, people act on it, but there are people that tear into it. And I'm going to show you something on the SPY in a moment. But there are people that tear into those numbers. Now, you held right here. See if you flip this higher high, and if you can push. Natural gas prices do not seem to be going up and storage seems to be increasing. So there's very little pricing power here. So we could see this continue. We had a decrease in pricing by 4.6% month over month. That's huge if you multiply that out year over year. It's huge. So keep that in mind. Do not rule this out. But just see if it flips there and then see if we can work our way back up to this 27 level. Now, I do want to go through some of these so that we're all on the same page. See, with the Qs, you came up, right? I've got a little signal right here that I need. And then I flip right there and I push, okay? So for me, here's what I have. I have this little box, right? And I'm going to pop out of it. What's important about this box is I just said that someone understands the CPI and someone drills into the CPI. Remember when we gapped down and everyone's like, we gapped down and then we rallied and it can't possibly work, right? There's got to be something wrong. These are the last two CPI numbers, okay? And this one was not great, but maybe somebody tore into this and maybe they saw that food didn't go up. Maybe they saw something that they really liked, right? Maybe they were smarter than me. There's a lot of institutions out there that have these banks of very smart people, right? And they dig into these numbers a lot. Like that's their job, is to understand that one line. And they get an edge from it. And I'm wondering if that's what happened here. I'm wondering if they saw that food didn't move that much or that car prices were dropping and knew that the CPI was getting weaker And that's why we saw this move, right? Price always moves, and then we figure out why. People say, I don't care why, I just care about price. If you can figure out why and then understand what it's going to be and why it's going to change, that's everything, right? I care about the why. I'm not going to trade the why, and I'm not going to not trade because I don't know what's going on, but that doesn't mean I don't want to know why. I always want to know why. I can explain exactly what these peaks were here, where they were talking about we might have to stop bond buying, we might have to raise rates, we're going to have to start selling our portfolio. This is when Powell said that. Okay, these were all peaks. Okay, they were not technical peaks. Someone's going to go back and say why this happened was technical. No, this happened because of Powell. Same reason you have these gap downs that I've gone through ad nauseum. So when you understand the why, you can move and do a lot better. If this is when the inflation problem started and it's a year later and the inflation problem might, listen to my words please, might be ending here, we want to pay attention to that, don't we? So keep that in mind, look at this, boom, watch the higher high, here's your low undercut, and now you flipped. That's a confirmation move. Does that mean it's going to hold 100% of the time? No, it does not. But it does mean that you should probably be looking at TQQ. This is from a previous newsletter recommendation. But it probably means you should be looking at TQQ. And I'll tell you that I'm definitely looking at TQQ, and we've been playing it in the trading community for a couple of days now. But to me, it looks, well, 2 days. But to me, it looks like it's ready to go. Okay? Whether it continues to go, whether we base and pull back, I would much rather these pull back to the 5 and set up and go again because I'll get better prices. But until the slope of this 5 starts pointing down and I'm under it, I think you have to lean towards buying. That's where my head is. Now, that's not saying that there's not certain names that you should be focused on. Okay, there are definitely certain names that you should be focused on the short side. So this with FTX, I'm just going to state this. You know, you had the CEO of Binance come out on Friday and say, hey, by the way, this could be like our 2008 great financial crisis. Okay, that's the guy that dug into the books at FTX and said, no, I don't want to buy your company for free. Okay, he realized how much money he'd had to put into the company in order to run it. And he said, no, right? I don't want to take over your operations. I don't want to run your business. Okay. I understand that the CEO of Coin is out. I understand he's being very positive. I understand that there is certain portions of them that are regulated by the SEC. Okay. But that's very different from them being a broker dealer. Even yesterday, he was talking about, I'm a broker dealer, but we don't really use the license. He was talking about it on CNBC. It doesn't matter. What matters is your counterparty risk. So let's say that you're saying, like he said today, you have $5 billion in assets. Okay, well, how are those assets? Are they collateralized somewhere else? What other side owns the paper? Right? Like there's so many questions to this. And the only thing that I can equate it to, and I'm not saying it is, but to think that it might not be is you're just deluding yourself. You're going to tell me that as capitalized as Bear Stearns was and Lehman Brothers, that Coinbase is more capitalized and has better connections? So to think that this can't happen here, to me, is just delusional. I have a short position on it. I've been shorting it for a while now. I've done quite well with it. I'm going to be blunt. I'm short over the weekend in case some announcement happens with something with Coin. Would I short it here with this kind of bar? Probably not, unless it was the Friday ahead. But right, if I pop over here, maybe I get another big push day and it gives me an even better place to put that short on, right? I'd like nothing more for this to run up. My point in saying this and what I've been putting out on Twitter is I just want people to understand that there is significant risk here. Just because the CEO says something doesn't mean that that's the whole story. He might not even know what his problem is, right? Do you think that FTX knew that if this guy sold those coins that his company was going to go to zero? He had no idea, right? And he was supposedly the, next JP Morgan of Wall Street, right? So we kind of have to just use our minds. Now, if this is not something that you're interested in, but you think that there could still be systematic risk to the entire crypto space, this is BITI, okay? ProShares Short Bitcoin. This is something we've been playing around in the trading community, and I just want to go through this so you see these levels. Look at these levels. I mean, this is one enormous base. That's what we were marked to mark. That's where my target is on a 20% move. So if I have a 20% move down, that's where I can wind up. And we had a pretty good day, a couple days there. But I do think you're setting up again, and I would watch this. And you could use this as a vehicle if you didn't want to take company-specific risk. But I don't see anybody, or I certainly will tell you this, there is no institution that's going right now, you know what we need? More crypto exposure. Right? So if you just think about it from that perspective, this still might be something worth looking at trading next week. Have a great weekend. Right now, the trading community is closed. If you are interested in joining, there is a link up here in the top right corner. Simply click the link and you will be added to the wait list. Have a great weekend. Trade to win.